All right, get ready to dive deep because today we're all about Pantheon Resources, this independent exploration and development company making some serious waves up in Alaska's North Slope.
Yeah, they're definitely one to watch.
We've got company reports, we dug into expert analyses, financial news, the whole nine yards, really trying to get a grip on what sets Pantheon apart in the oil and gas world.
Right. They're doing some things differently, that's for sure.
And trust me, there's some seriously exciting stuff here. We're talking potentially Prudhoe Bay level, huge. They're sitting on an estimated 1.6 billion barrels of recoverable oil.
That's right. And to really appreciate what Pantheon might be able to accomplish, we need to kind of look back at Alaska's oil and gas history. It's a bit of a wild ride full of booms and busts, lots
Yeah.
of lessons learned, and all that is really shaping how Pantheon's approaching things today.
Okay, so let's fire up that time machine, right? Where are we headed first on this little history tour?
Well, got to start with the OG, right? Prudhoe Bay, the granddaddy of all the North Slope oil discoveries. Think about it, 25 billion barrels of oil in place.
Whoa, 25 billion barrels.
Yeah.
That's just, can't even wrap my head around that.
It's a hard number to grasp, for sure. And over the years, they've managed to recover about half of that.
Mm,
Pretty impressive.
50%, wow. But how does that stack up against what Pantheon's found? They've got a lot of oil too, don't they?
Oh, absolutely. Pantheon's discoveries are huge. We're talking an estimated 17 billion barrels of oil in place. But there's a key difference here. Prudhoe Bay, they were lucky. They hit these highly productive reservoirs. Oil just flowed out easily. Pantheon's oil, it's a bit trickier. It's trapped in these tighter rock formations.
So it's kind of like trying to squeeze honey out of like solid rock versus pouring it from a jar.
You got it. Perfect analogy.
Yeah.
And that difference, it shows up in something called recovery factor, basically what percentage of the oil you can actually get out. Prudhoe Bay, they're rocking a 50% recovery factor. Pantheon, because of those tight reservoirs, they're currently projecting around 10%.
Huh. So even though Pantheon has this massive amount of oil, actually getting it out is going to be a tougher challenge. So
Yeah.
does that mean they're like doomed to repeat the struggles of other companies that tried to tackle similar reservoirs?
Not necessarily. Let's shift our time machine over to Kuparuk River. It's another big oil field up in Alaska. It's known for having this lower quality oil, very viscous, kind of thick and sticky, and initially they thought they'd only be able to recover about 30% of the oil in place.
But they found ways to up that number, right?
Exactly. They got clever, implemented techniques like water flooding and something called polygonal drilling, really pushed that recovery factor, got it up to 35%.
Okay, so technology can make a difference. But wouldn't all that require like huge investments?
It does, it's a long game for sure. And this brings us to another thing that sets Pantheon apart: location, location, location. Unlike Kuparuk or some of those older discoveries, Pantheon is in a prime spot. They're right next to existing infrastructure. You've got the Trans-Alaska Pipeline System, TAPS, and the Dalton Highway right there.
So they're not out in the middle of nowhere having to start from scratch. That's going to be a massive plus.
It's a game changer. Think about it. They can use those existing pipelines and roads instead of spending billions to build their own. Huge advantage.
Yeah, it's like if you're building a house and there's a Home Depot right next door, you've got everything you need right there.
Exactly. All right, let's fast forward our time machine a bit now. Let's check out some more recent discoveries like Pika and Willow in the Nanushuk Formation. These are new kids on the block, boasting great reservoir quality and looking at some seriously high recovery rates.
Okay, so how does Pantheon's oil compare to these Nanushuk discoveries? Are they in the same league?
Now, this is where it gets really interesting. Part of Pantheon's territory, they call it Aphun East. It's actually geologically similar to the Nanushuk. They haven't drilled there yet, but if the reservoir quality matches up, well, that could significantly bump up their overall recovery potential. We're talking maybe an additional 600 million barrels of prospective oil resources just in Aphun East.
Hold on, prospective resources. What exactly does that mean? Is that like oil they can actually produce or more of a hopeful guess?
Good catch. Prospective resources, it's basically oil they've identified through geological analysis and seismic surveys, but it hasn't been confirmed by actual drilling yet. Think of it like potential oil. It's different from contingent resources, which are based on real well data, so they're more certain.
So prospective is like spotting what looks like a great fishing spot on a map, but contingent is actually having a fish on the hook.
Nailed it.
Hmm.
Now, the bulk of Pantheon's current estimate of 1.6 billion barrels, that falls under contingent resources. It's a lot more concrete, But as we talked about, they're still dealing with those tight reservoirs. That
Yeah.
recovery factor is still a big question mark.
Yeah, so they've got this potential gold mine, but accessing it, that's going to take some serious ingenuity. And this is where we can make another interesting historical comparison, right? Smith Bay.
You're on a roll. Back in 2016, there was this massive discovery at Smith Bay, potentially billions of barrels of oil. They even thought they'd have high recovery rates. But there was a catch.
What was the catch? What went wrong?
Location, location, location. Smith Bay is way out there, super remote, no infrastructure in sight. Building pipelines and roads in that environment, forget about it. It would have been astronomically expensive, a logistical nightmare. So everything just kind of stalled.
So even a massive oil discovery, if it's stranded in the middle of nowhere, it's practically worthless.
Pretty much. And that's where Pantheon's story really takes a turn. Remember, prime location, right next to all that existing infrastructure. That's what sets them apart from those past discoveries like Smith Bay.
Okay, so they've got the oil, they're in the right place, and they're learning from past successes and failures. Sounds like Pantheon is in a good spot to maybe, I don't know, make history up on the North Slope.
Yeah, there's definitely that potential. They're not just relying on luck here. It's massive resources combined with a really calculated approach, blending innovation with those hard-won lessons from the past.
This is getting exciting. But before we get too carried away, let's break down the specifics of Pantheon's strategy. How are they going to turn all this potential into an actual, thriving oil production operation? That's what we're going to dig into in part 2 of our deep dive.
Yeah, we'll unpack all of that next time. All right, welcome back to our deep dive into Pantheon Resources.
Yeah, it's good to be back.
Last time, we took that trip through Alaska's oil and gas history and saw how Pantheon is using those lessons, along with their killer location to maybe, just maybe, rewrite the future of oil production on the North Slope.
It's like they've got this treasure map, right? But instead of an X marking the spot,
Yeah.
it's a pipeline and a highway?
Yeah, pretty much.
But let's get down to brass tacks here. How are they actually planning to make this happen? They've talked about this phased development approach, starting with Aphun and then going for Kodiak. Can you break that down for us? What does that even mean?
Sure. Pantheon's playing it smart, very strategic. They're minimizing risk and trying to maximize efficiency every step of the way. They're not going for this massive, all-at-once mega project. They're starting with Aphun, which is the field closest to all that existing infrastructure we talked about.
Okay, so going for the low-hanging fruit first. Makes sense. But what does that actually look like on the ground?
Their game plan is to hit first oil from Aphun by the end of 2028. That means having oil actually flowing through the pipeline, bringing in some cash. And they've estimated this initial phase is going to need about $120 million in investment.
$120 million. That's a big chunk of change. Where's all that money going?
Well, they've got it all mapped out. About $20 million is earmarked for connecting to TAPS, that Trans-Alaska Pipeline System. That's how they get their oil to market, right? Then another $20 million to upgrade those facilities. They already have things like adding equipment to separate out the valuable natural gas liquids from the oil.
Right, got to get those extra goodies.
Exactly. And then the big kahuna, about $60 million, that's for drilling and actually completing those first production wells.
So they're being smart, resourceful, using what they already have instead of starting from scratch.
You got it. And here's another neat trick. They're also planning on repurposing an existing well, turning it into an injector well. That helps maintain pressure in the reservoir and boosts long-term recovery. It's all about squeezing as much oil out of those tight rocks as possible.
Okay, I'm starting to see the bigger picture here.
Mm-hmm.
But 120 million, that's just to get things rolling, right? They're not stopping with just a handful of wells.
Oh, no, this is just the tip of the iceberg. Once they get that first oil, they're planning to seriously ramp up drilling.
So what does that look like? How many wells are we talking about?
Well, right now they're projecting 10 new wells in that first year of full-scale development and another 16 in the second year. It's an aggressive plan.
Wow, that's a drilling frenzy. Isn't that going to require a massive jump in investment? We're talking way more than 120 million, right?
Oh, yeah, it's going to take a lot more cash. They've estimated that total investment will probably peak around, around 300 million before they hit something called positive cash flow.
Positive cash flow. Explain it to me like I'm 5 years old.
Okay, so imagine you've got your piggy bank. You're putting money in. That's your investment. Positive cash flow means you're taking more money out of that piggy bank than you're putting in. You're making a profit.
Got it. So they're thinking they can become profitable relatively quickly, even with those massive upfront costs.
Yeah, that's the plan. And don't forget, they've got those low operating costs because of their location, access to a good market for their light oil, and that interesting gas sales agreement.
Oh yeah, the gas. Can you remind me how that fits into all of this? It's been a while since we covered that.
Sure. So, along with all that oil, Pantheon's found tons of natural gas. And they've got this deal with the Alaska Gas Line Development Corporation, which basically guarantees them a buyer for their gas at a fixed price. That's a steady stream of revenue, which they can use to fund their oil operations.
So they're basically using their gas resources to, I don't know, turbocharge their oil ambitions. That's pretty clever. But what happens if the price of oil tanks? Won't that mess up their profitability?
It's a good question, and Pantheon's thought about this. They've calculated something called their break-in oil price. That's the price they need for a barrel of oil to cover all their costs and still turn a profit.
Okay, so what's the magic number? What oil price do they need to make this whole thing work?
Their calculations show a break-even price of around $72 per barrel within those first 2 years, and they've built in some flexibility. If oil prices drop below that, they can tweak their drilling schedule, focus on the most productive wells until prices bounce back.
So they've got some wiggle room to deal with the ups and downs of the oil market. That's good, but let's talk big picture, long term. They've hinted at this massive multi-billion-dollar development that could pump out over 100,000 barrels of oil per day. How does that fit into their financial plan? How do they even pay for something like that?
Now that's where things get really ambitious. Developing their entire resource base, both Aphun and Kodiak, that's a monster undertaking. They've estimated it could need a total investment of, get this, around $25 billion over several decades.
$25 billion. I need to sit down for a minute. That's a mind-boggling amount of money. How do they plan to raise that kind of capital?
Their strategy is to build on the early success of Aphun. As they increase production and start generating cash flow, they'll use those profits to fund the next stages of development. It's like building a snowball. It starts small but picks up more and more snow as it rolls downhill.
So they're using their own success to fuel their growth. Less reliance on outside money, right?
Exactly. And yeah, they'll probably need more funding along the way, but their approach, starting small and generating cash flow early, it makes them a lot more appealing to investors and lenders.
Okay, it's all starting to click now. They're not just drilling for oil, they're building a real business here, a long-term play for Alaska's energy future. But let's be realistic, there's got to be some risks involved, right? What are some of the things that could throw a wrench in the whole operation?
Well, every treasure map has its traps, right?
Yeah, true.
And for Pantheon, one of the biggest challenges they face is what we call geological risk.
Okay, we talked about those tight reservoirs, how tricky it is to get the oil out. But how big of a risk are we talking about here? Could this actually sink the whole ship?
Yeah, I mean, Pantheon, they've got these impressive resource estimates, but at the end of the day, they're still just estimates, right?
It seems like investors are getting more and more hesitant to put their money into fossil fuel projects.
You said it. It's a different world out there. So Pantheon, they've got to make a strong case, convince lenders and investors that their project isn't just profitable, but it's responsible, part of that bigger energy transition. Show they're committed to minimizing their environmental impact, maybe exploring things like carbon capture or offsetting.
So it's not enough to just be an oil company anymore. Got to be an energy company, thinking long term, all that.
Right. And what about the regulatory landscape in Alaska? We touched on that a bit. There are some potential hurdles there, aren't there?
Yeah, the North Slope, it's not exactly known for being like a free-for-all when it comes to regulations.
You got that right. So even though their projects are on state land, which usually makes things a bit smoother, they're still going to have to jump through a lot of hoops, permits, approvals, all that, for drilling, pipeline connections, production facilities, you name it.
And I imagine any delays or, unexpected stuff popping up that could really mess with their budget, push back their whole timeline.
Yeah.
But, I mean, they wouldn't be going all in on this if they weren't prepared to deal with them, right? Are they doing anything to, mitigate those risks?
Absolutely. They're not just sitting back and crossing their fingers. They put together a really solid team, experts in reservoir engineering, completion technology, environmental management. They're not messing around.
Yeah, you got to have the right people.
And they're also being very transparent, with investors, stakeholders, keeping everyone in the loop about their progress, the challenges, how they're tackling them. That open communication is huge.
Transparency, yeah. Especially with a project this big and complex. You got to be upfront about things.
I agree 100%. And another smart move, they're not putting all their eggs in one basket. With that phased approach, it gives them room to adjust their strategy along the way, react to new information, changes in the market. That flexibility could be really important given all the unknowns out there.
So it's a plan, but it's not set in stone. They're ready to adapt. I like it.
Yeah.
But with all these challenges, is it even worth it? What's the upside, the potential payoff, if everything actually goes their way?
Well, if Pantheon can pull this off, they could become a major force in the global energy market. Think about it, a company generating serious cash from billions of barrels of oil, boosting Alaska's economy, maybe even influencing the future of energy.
Wow. Yeah, that's a pretty inspiring vision. But even if they don't achieve all of that, their story is still pretty amazing. Here's this small company, big ambitions, taking a calculated risk, pushing the boundaries of what's possible in oil and gas. It's exciting.
I agree. And it's a good reminder that innovation, it can come from anywhere. Who knows? Maybe they'll completely rewrite the playbook for oil exploration and development in the 21st century. That would be something.
Well, that's why we love doing these deep dives. We get to peek behind the curtain, explore these complicated stories, and try to understand the forces shaping our world. Thanks for joining us on this incredible journey into the world of Pantheon Resources. It's been quite a ride.
My pleasure. Thanks for having me.